How's everyone doing today? Felt like doing that. All right, so I hope everyone's doing great. It's been a while since we've talked. It's been very hectic over here. Like always, please post us on Stock Twits, get the word out. People need to learn about Clover. They need to hear about Clover. And if between the year 2020 to 2030, if people's favorite color is not green, then I have not done my job, right? So that's going to be my goal. So I hope everyone's doing great. So in this video, we're going to be talking about some things that Vivek Gardapalli said in regards to Clover. We're going to talk a couple things in what's happening with the economy and what's going on with the stock market as a whole. So please let me know if you guys can hear me. I am starting this a little earlier, better early than late, as I say. So let's just get the S&P here. All right, let's add to stream. So as you can see here, guys, today was a really bloody day for the markets, right? It may not seem bloody right now, as you can see here. Let me push this down here so you can see better. It may not seem bloody, but it's because the market's just trying to figure out what the hell, which direction it wants to go. But as you can see, today was definitely a very, very, very tough day for the markets, right? However, if you look at Clover, a lot of other stocks, they did not go down as much as the broader market. So if you go in here and look up Apple, Apple is down 5.64%. If you go in and take a look at Tesla, Tesla's down 6.8%. You see, all the safe havens that you have, even honestly, a very powerful stock really shined during the pandemic. Target's down 24.93%. Okay. And we can do an intrinsic value calculation on this to see if it's any good value. Seriously, there's so many stocks from Minneapolis. It's insane. There's like, I think, 18 publicly traded companies. Anywho, the big issue we have for Target that is worrisome, not so much for Clover, but for the general market, is if you look at their earnings, and they just recently had their information regarding what happened to their stock. They said that a lot of consumers have stopped spending, right? A lot of consumers are starting to hold back, especially brand purchases. They are getting into a point where the wealth effect and inflation is starting to trickle down into very tight margin companies. Now, I'm just curious to see what are the profit margins for the gross margins for Target. So we're looking at anywhere between 28-29%, which is amazing for a company like this. I mean, this is Target's balance sheet, it's free cash flow, it's net income, and this is a Wall Street darling, right? But definitely has seen better days. So very quick here, just because there's something important in regards to Target. You have consumers coming in. There's a DCF calculation here. If you have consumers coming in and they're saying, I am not comfortable purchasing anymore, you are getting an economy where individuals are not buying any more goods. And that is a recession. And what ends up happening is when you get a bunch of people not buying any more goods and your revenues start to slip and all these things, your profitability starts taking a hit, then employers will start to fire employees, right? Because it's all about profitability. This is a capitalistic country, right? And as soon as you get these people starting to fire, then you're going to get an unemployment starts to increase. then the question, the $1,000,000 question is the Federal Reserve going to step in? And the answer is, I believe, is no, not at this time point. Now, many of the Biden administration people say there's no reason of a recession and all that. But if you're asking yourself, what is he talking about? Why am I talking about all this? Well, it's because of this specific graph here. Just take a look at this. A year from now, stocks that tend to do well during the panic are healthcare and technology. I'm going to say it again. Healthcare and technology. Okay? Clover Health. Healthcare stocks tend to do extremely well, outbeating everything in the scorecard here. Why? Because when you're in a recessionary time, inflationary time, recession time, bear market time, even good times, people don't drop their health care insurance. Okay? It's very clear. So I strategically, just from my lifestyle, I picked this stock because of that mentality, what I've learned from Warren Buffett. Okay? So we're going to go in and analyze this video. And if you're enjoying this, please consider dropping a like. It makes me happy. It feels good every time I see a like. I do a little dance. I'm just kidding. But I really does make me happy. But it does help with the YouTube algorithm, and it helps spread the word about Clover, which you can agree it's been unfairly attacked. So do YouTube a favor and spread this mother effer out. Okay, so let's go ahead. Let's zoom in here so we can just kind of analyze his tweets. Okay. All right. So here it is. There's market uncertainty for almost every company today. Okay. He went out today. He spoke to, first off, the more I'm starting to hear this guy out, the more I'm starting to think that this guy's like borderline, if not a genius. This guy's really smart. I mean, I look up to them. I mean, he's just anybody who's like, like dark skinned and who's at a leading position. For someone who's like first generation, like myself, I tend to like look up to them like, oh, I mean, that's just who I am. But I'm very proud of him for what he's accomplished and his team. Someone who's first generation, it's very, very good. So if you look up here are some aspects of Clove that make me excited, not just about today, but also about our potential. Again, today, Clove is down lesser than Apple, lesser than Netflix. This is a signal, a batch signal showing you that maybe we may have underpriced Clover a little bit too hard. This is a tipping point, a flag for me, a checkbox saying, okay, something's happening here. Okay. Let's continue. Number one, growth and expansion of our tech moat. Okay. They're building a software that helps with their MCR. A software that's is getting smarter every single day through every patient it sees. And as the software dwells in and it compounds like a virus, spreading like the 300 and whatever 20% they grew over year, this Clover Assistant is going to get smarter, and the smarter it gets, the stronger moat it will become. They are in line with the mission of CMS. CMS is going to pretty much put them as the poster's child for every healthcare company to follow. Okay. Number two, clinical impact increasing. A lot of physicians are starting to adopt this. There's a lot of incentives for physicians and a lot of incentives for patients. And again, more usage is being implemented in the Clover Assistant. Improving MCR margins. Clover Health is stepping into historically marginalized populations that are very tough for incumbent insurance companies to process because they're too expensive. So unfortunately, those people of color, people who've been historically marginalized in the lower socioeconomic sector, have been left out. Remember, in bear markets and recession markets, great companies are created. A company that can solve an issue, a company that can solve a problem is going to thrive after this, whatever we have, all the issues that we have in our current time. Number 4, going into the Mastering Stock Market course, right? A path of profitability and free cash flow. This is huge, okay? Now, personally, as someone whose heart is in medicine, I give a crap about number 2. That's why I care about. I care about clinical impact because I want my people to get better healthcare. I know this is a stock market channel. It's very hard to kind of change it up here, but the 4th one is very important. Sadly, in the discussion of this video, it's the most important one, I have to say. Because right now, as soon as they become profitable, the business model gets checked on Wall Street, and Wall Street, like an archaic, caveman-like thinking, will swarm in. That's my job. I like to find stocks before Wall Street comes in. Okay? Number 5, a business minimally impacted by inflation, economic cycles, commodity prices, and supply chain uncertainty. And let me finish it for him. And political powers contracting, whether it's Democrat or Republican. I'll finish it for him. This company will succeed. Because what's the most common thing between a Republican and Democrat? We're all going to die someday. We all age someday. Okay? We all need healthcare. Healthcare and technology will outperform. Healthcare and technology. Okay. Now let's take a break from this tweet here and let's go into hedge fund information. Unfortunately, every time stocks go down, dumb money, dumb retail investors sell. Stocks go down, retail investors sell. Stocks start to go up, institutional investors start to chill while retail comes in. Yeehaw, we've hit the bottom. Yep. Guys, you guys don't know of a bear market rally. We just had one a couple days ago. Okay? Don't get too excited. Don't get too excited for the short term. Be emotionless. Next one. What I believe will matter when we look back in 10 years in terms of whether or not a company in healthcare has a massive market value is if that company did 2 things. Now, first off, this is a great, he chose these words on purpose. One is to allude to the investor that they're in it for the long term. And he has made that clear. They're thinking in 20 to 30. They are the original founders. They are looking, this is their baby. Clover Health is their baby. Okay? Like that, Clover to him is like a son. To a business, very attached, okay? All right. So the 2 things are, let's scroll around. Made a massively positive impact by solving real problems. Like I told you, great companies are born during recessions. A company that can fix a problem tends to win. And that's what he's alluding to right now. He's hitting all the ducks in the row. Path to profitability and free cash flow. A business that's not going to be infected by inflation. Apple gets infected by inflation. Apple gets affected by supply chain issues and uncertainties. Tesla gets affected by economic cycles. If people don't have money, the wealth effect to spend money on luxury things, Tesla, they're not buying Teslas. Okay? Target's having a hard time right now, right? Clover is not going to feel any of that, guys. Number 2, accomplished that through the creation of a significant technology moat. He references it again. He hits this technology moat number 2, in technology mode here. Again, he talked about it here. Number one, the key ingredients to those special companies, I believe, will be the following: an inspiration and ambitious mission that has been consistent. Okay, it's a Clover Health Assistant is created by doctors for doctors, right? And every patient, their needs come first, and they put the needs, just like what I learned in Mayo Clinic. The needs of the patient come first. And number two, an entrepreneurial team. This is you're helping people, but at the same time, the people around you are getting wealthier. You guys don't know this yet because some of you guys, a lot of them, people are naive investors. You guys are getting wealthier as I'm speaking to you guys right now. The companies you own shares in a business that's working hard and constantly working for that profitability, making billions of dollars. Listen, you're getting a company that's making $3 billion this year, a little bit more, and it's only trading at literally $1 billion valuation. It's like getting a company for 1 million that's going to get 3 million this year and then 11 million in 3 years from now. Okay, 2025. Okay. Number three, a demonstrated willingness to make hard decisions, which they definitely do. They've made tough decisions. We're really excited about Clover Health's start to 2022 and the groundwork we're laying for 2023 and beyond. We remain focused on delivering growth, improving margins, and ultimately generating significant positive free cash flow. Again, he mentions these two things twice: technology moat and positive free cash flow. We already looked at the earnings. It's very clear he's speaking to investors. He's not speaking to patients here. And if you want to follow me on Facebook, it's at Al Stock Trades. And yeah, so that's my Facebook. I'm sorry, that's my Twitter. I don't really use social media that much, so I'm still trying to learn it all. All right, so oh yeah, thanks for the follow. So there's that, okay? And definitely, I hope Twitter verifies him because I think he needs to be verified. All right, so I want to make an announcement really quickly. So the Mastering Stock Market course is lifetime access to the course contents. It is currently in beta access, which is a perk, right? It's temporarily, whoever buys it now and who's ever basically all the members that are in it right now that are watching, you guys are grandfathered into getting lifetime access, lifetime, no more monthly payments to Al Stock Alerts. All our proprietary machine learning technology, our support and resistance, our brain machine, it is all going to be included in your mastering. However, in a couple of months, it will not include it will not include this. It will not include lifetime access to Al Stock Alerts. So only beta access. So if you're interested in getting the course, this will only include a 1-year free subscription. So make sure you look into that, okay? And read these nice articles that have been published about our software. It's really nice. So other than that, that's pretty much all I had to say in regards to the tweet. There's a lot of great juicy information here. Here's the smart money and dumb money ratio. There are other things to discuss. However, we've talked about them regarding all the other stocks and how they've been down. It's important to understand that in a year from now, these stocks will outshine. Today was a special day, which is why Vivek said it in his first tweet. He said, there's market uncertainty for almost every company today. Here are some aspects of Clover that make me as excited, not just about today. So today is very special, like I told you. Clover didn't get hit hard. That is going to signal a lot of people that we may have hit the bottom for Clover. All right, so let's go in and answer some questions here, and we'll that caps off the video. Clove, yes, sir. Hell yeah. I'm working hard. I'm working hard for that dream. Clove was up. Yes, it was. It was very exciting. A lot of people paper. Yeah, no, of course they paper hand too quickly, but a lot of people. Oh shoot. Okay, I want to talk to you guys real quickly. I just remembered. All right, so you guys are gonna laugh. I mean, maybe some of you guys may think like this, so maybe we can have a talk. Okay. So I don't know. I used to never have pet peeves, but as you get older, you tend to like develop some pet peeves. Okay. Here's my pet peeve. Okay. I do not like when people say the stock market's gambling. Okay. To me, that's like someone taking long nails and going down on a board and screeching their nails into my soul. When someone, so I was getting a haircut and I was speaking to the barber. I was like, hey, you know anything about the stock market? He said, man, I don't really put myself in stocks. It's gambling. And I'm just like, who in here has heard that? I don't buy stocks or do stocks because it's gambling. I don't like to gamble. I only do it for fun. So my response, before I hit him with facts, my response was, well, why do you think it's gambling? He was like, well, yeah, I mean, stocks just go down, right? They just go. And I was like, well, how do you evaluate? Do you think there's a way to evaluate them? Do you think there's a way to put a price on them and actually find a price target? He's like, no, it's impossible. How do you evaluate that? I'm like, well, you're a barbershop here. I mean, how much do you think it's worth? You would calculate the revenues for the past 10 years, look at the profits, look at the net income, your gross margins, and calculate them. And you don't have shares, so it's a lot easier to calculate than a stock. And then I hit him with some facts. And you may not know these. I asked him, I said, what's the percentage of the wealthy, the top 10% of people? How much of the stock market do they own? Right? And I went on Google. I said, I'm going to ask this question. I'm going to ask it again. How much of the stock market do wealthy people own? Okay. It says here, the wealthiest 10% of Americans own a record of 89% of all stocks. 90% of the most wealthiest people in America, they own stocks. Now you're telling me you want to be wealthy, right? You want to have all these nice things. You want to live the American dream. That's Arizona. You want to live the American dream, and you're telling me that you think investing in the stock market is gambling, while 90% of Americans, 90% of the top 10 richest people in America own 89% of the wealth in stocks. Does that make sense? I'm like, and I told him, I'm like, you've probably been into a casino more than they have. You think they're gambling in the casinos? No. Why does Warren Buffett, and I asked him, I said, listen, I said, Elon Musk, where is his majority of his wealth tied up? And he said, well, he just bought a jet. I don't know, it was like 14 million. I'm sure his wealth is tied up in that. It's sad, guys. It's extremely sad. Okay? That right there should tell you something right there. He's a consumer. Sad. Whoever's on this call right now, who's ever listening, I may not have a lot of followers and subscribers. I don't care. I'm happy with all of you. It's a privilege to know what you guys know. It's a privilege to even be cognitively aware of the stock market. I mean, for you guys to find this stock, woo, you guys are one smart mother effers, okay? Which is why we created our stock trades. It's sad. People think the stock market's gambling. It's a mathematical model where it's all about fundamentals. All right, let's go through these questions here. Hey man, no, thank you, Pedro. Yeah, I had to share with you that story. I just found that so sad. Bro, you gotta go all in on oil. Well, yeah, no. So we actually did oil. We made 76% on oil. In fact, let's add on to my members here. So if you go to price targets, we actually told my members here to back on February 11th, probably, to get in on Barif. And I said the price target 750. It was like trading at like $4 or $3 at the time. Now it's trading at, above that, 770. So they made a 73% gain, 73.5. So I can't even speak, 73.75%. I also told them in November to buy ExxonMobil. That was another great win. Likewise, just recently I said Upstart's a great one. If you guys got the dip at around 25 to 35 bucks, you just made 100% right there. Right. So I like to always make you help do some fundamentals and find all these stocks here that we have analyzed. Okay. So, and here's some top short squeeze, but that's so oil, I think is too, I mean, it definitely could go higher. It's just it's all about risk and reward for me. All right. I don't like to follow the masses. I like to pause and say, what are people? I don't like to go where people are. Like, I hate going to the club. I know that's random, right? I hate going to parties. I just don't like those things. I like to do things that other people don't do. It's a mentality I have. It's a contrarian thinking. If someone's rushing all that way, I don't go there. I'm like, I don't want to go there. It's a psychological thing that you need to build up if you want to be successful in the stock market. All right. So I start with 400 shares and holding 5,000 now, and after kept averaging IPO price, trusting company because this is going to definitely, I think it's going to print. Feel the same, not gambling. Absolutely. I've heard it more than I'd like to hear it too. It's just sad. It's just like, it's a pet peeve of mine now. Have you been averaging down now? Just, hell yeah. Hell yeah. I agree. Absolutely. Yeah. Barbers are more into sneakers than stocks. Yeah. Well, it's true though. I think he loves his sneakers, and that's a business within itself too. Just look at Yeezys, right? Very true. We need another Clove squeeze. Honestly, I think we're going to get a fundamental squeeze. You're going to see what a fundamental squeeze looks like. If you think a squeeze is nice, a fundamental squeeze lasts, right? It's a real relationship. It's a real respectful marriage, right? Yeah, I know exactly. You have to have that mentality. So, I really hope that this video helps. I really hope. If you do guys enjoy it, please like, please subscribe. If you dislike it, I won't be able to see it anymore. So go in the comment sections and just like tear me a new hole and just tell me how I can be better. You know what I mean? So, but yeah, we just like to remain humble here and try to, just do what we do and help educate retail investors to get a fair shake on Wall Street. I'm just sick and tired of the poor getting poorer. But honestly, I'm just tired, man. Don't you just like wake up one day, you're just tired? You're just tired of being poor? Don't you just like right now I'm having that moment with like me being fat. I'm tired of being fat. I gotta go work out, right? Don't you just like get to a point where like I need to change my life? You see, the people that lined up for those iPhones back when it first was created, if they would have spent that money and all the other dumb stuff they bought on stocks, they would have been millionaires right now. Education is key. Knowledge is power, guys. Knowledge is power, and you got to equip yourself and surround yourself with the right people. I recommend you guys looking at our platform. Our community is growing. And honestly, I'm very happy of the people that we're attracting. We are attracting smart, intelligent investors. We have really, our RQ, and I think the people that are in here are smarter than me, right? There are some smart people in here, right? And I'm very proud to be a small piece in putting this together for retail. So it really is an honor. Um, when do you think Clove will start moving? No one knows, honestly, but I do know that 2024 and 2025 is going to be a fabulous year for Clover. I think it's going to be, you're going to look back in 2024 and 2025. You're going to see this. Don't worry. For investors that came in 2020, 2021, you're going to see this, right? Oh, I wish I bought